This is the Mohsin Mortgage Program with Sarah Mohsin. Mohsin Mortgage is licensed in several states for residential and commercial purchases and refinancing. Call 800-662-9550. And now, here's your host, Sarah Mohsin.
Good morning, Boston. It's Thursday, and we're back. And I'm looking forward to just being here today and Friday. It's been a great week. A lot of interesting things that I've been reading about. In fact, I just noticed something here on Wells Fargo. They're going to test out a $3 debit card fee. Wanted to give everybody a heads up on that. So just in case you have a debit card and you're planning on using it, you are going to have fees that could range from $5 to $30 according to Wells Fargo. This is just an article that I just read recently. And Chase last year also began testing their $3 monthly debit card fee also in Wisconsin. Bob, very interesting times, obviously, as you and I know. And good morning to you.
Good morning, Sarah. I'm just thinking. I haven't gotten to that point of we're actually activating it, but I am considering my toll-free number sharing fee. It's 1-800-662-9550 for the Mohsin Mortgage Corporation. Right now, it's a free number. I give it to you. 1-800-662-9550. It's a very friendly number, and we couldn't encourage your calling it more to get really sound advice from the world of mortgages. And we're basically where you fit in right now in your life. 1-800-662-9550. Sarah? Wells Fargo, huh?
Well, hey, I think that in all fairness, I like to give people a heads up. They've announced it. They're letting folks know about this debit card fee, and Chase has done it. So just so that you know that if you are looking at using your debit card, you are going to be charged that $3 fee. If not, it ranges from $5 to $30 actually. So I just think, folks, pay attention to where your money is going. As I always say, first things first. You can clip all the coupons that you want. I'm all for that. I do it myself. But look at your mortgage statement and see how much you're paying into that mortgage. And then give us a call. If you really don't know how much lower you can go on that mortgage payment, because it does depend on a number of factors, your credit score, the value of your home, what you want to pay off. We can do the calculations for you so that you can see how much we can take off of that mortgage payment a month. Usually it's $200 to $300, Bob, a month, and that is what we're seeing typically just because of the fact that 2 to 3 years ago interest rates were around 5.5%, 6%. Those are typical interest rates for mortgages. Now we're at 4.25%, 4.5% on a 30-year term, 3.875 to 4% on a 15-year term. Very unusual, very, very exciting for a lot of folks, and we certainly don't want people to miss out. The big thing of missing out is that you're going to end up spending more money than you need to, and there's no reason why you should give that money away when you can put it towards a college education for your children or towards retirement. Simple as that.
Yeah, well put, Sarah. It's a powerful tool. It won't be there forever, and you're putting your own money to work for you, so why not?
Why not is the question, and I really don't want folks to hesitate, because hesitation is going to put you sort of in a place of, like, in a holding pattern. You might think about it and sort of say, well, maybe not today, I'll move forward in another week or a month. I just don't want you to miss out on an opportunity to get just a better understanding. If you're not even looking at refinancing, just get the tools and the resources on what you can do maybe in the next 6 months. If you're looking to purchase a home in the next 3 months or 8 months, we can get you properly organized so that you can have the right amount of funds available. And we can even give you some suggestions on real estate agents that have been very good and kind about showing properties and making sure that they fit your needs and what you're looking for. So it's very important to plan long term, and we are a part of that whole process. So that's what we offer. It doesn't take more than a few minutes. We're available 24/7, whether you're looking at calling us on our 1-800 number or you're looking at our website, Mohsin, Mohsin, mortgage.com. We're on Facebook and Twitter. So we actually can be reached in many different formats, and certainly I love to have these great conversations with our listeners on questions that they may have about interest rates and why they're so low and when are they projected to go up and how could this actually be a long-term benefit for me if I have a car loan right now or a student loan or credit card debt or just simply cutting my term in half. These are things that you have options available to you right now. A very rare time in history, Bob, I have to say.
A very rare time and a time to plan and take action after planning. And speaking of planning, you have some money rules that kids should learn to help families plan better for the next generation.
Right. I do believe that it's important to talk about your family's financial life and what you're passing on to your children and the demands that every child has as well, trying to keep up with their friends and the demands that you have as a family as well to save for a nicer house or a swankier vacation or maybe Lego sets. These are things that you have to look at and also try and explain to your child or children the value of money and what it takes to put money away to build this very healthy relationship with money. We talked about having this belief system probably 2 days ago, I believe, that you have a right to getting an allowance and you have a right to certain things when it comes to not working for it. And when you build that kind of philosophy at home, it carries on to your children for the long term. And that's very dangerous because we still have statistics, I believe they're in the good 40s to 50% of adult children 18 to I believe 39 that are still reliant on their parents for housing costs, food costs, things of that nature.
Oh, yeah. In other words, a lot of them are living at home.
They are. And I understand with the recession in the market and unemployment being high that there obviously is a trend in having children living at home after college. However, you still need to apply those rules that just because you are living at home and the market is difficult, you still have to be able to bring something to that family unit. And to whether you're working in any type of job, bring something back financially. And I have a story which I found really very interesting. I remember a very good friend of mine who had her adult son who was in his, I believe, 24, 25 years old. And he had to move back after college, and it just so happened that he had a job that didn't work out. So she had asked him to pay at least some amount in rent. And I know that's difficult to ask sometimes from your children because you're trying to help them out, but whether it's $100 or $50, it's a good way to start them to understand that it's not a free ride. And when you take that money, I've had folks where they've just put that money away until their son or daughter gets back on their feet with a job, and then give that money to them if needs be.
I've known families that have done the very same thing, but the main thing is the steps along the way. It's getting them in the right direction.
It is, and not to teach your children well about spending money, and when when they're asking for things at a very young age, to also make them understand that they have to know what it takes in order to afford that toy or whatever it is. That good grades are expected, and to help around the house is simply the price of family life, Paul. It's not, oh, well, you did something extra, and I have to pay you for it. And, tell them at some point that you have to tell your kids that the bank of mom and dad is officially closed.
Well, yeah, because mom and dad can be so, they get into a mindset that's so much into denial about any expense being incurred by having grown children living there that even they tend to forget that the children who are adult and living there are eating food. A week goes by, and that's a big chunk of change, too, when you talk about contributing towards a little bit of the rent that they should be paying. The folks are making up the difference.
Right, and certainly you also have to make sure that your children have a right to sometimes make bad financial decisions as long as that they learn from it. And when you start them at a young age with putting money away, whether it's in a piggy bank or wherever it is, an account that you've set up, that only 50% of the money put into that piggy bank can be taken out, or 20%, so that there's that sense of financial stability for someone at that young age. And that's how you build self-sufficiency when it comes to your finances, and you give that to your children. And I know that once that goes, if you don't have that in place, it can become a very difficult period for children who are growing from their teens onwards, and they haven't learned those tools, because by the time they reach 30, if they haven't learned those rules and haven't used those tools, you're going to have a child who's going to be constantly relying on you.
That's really good advice, Sarah, and it reminds me of something that went way back. I remember when I was a kid, it was still very popular to teach children to save, to buy savings bonds. And when the savings bond money was big enough to buy a bond, it would be saved. Then came the next, then came the next. And that wasn't even in terms of a piggy bank. It was easier for them to visualize that the money wasn't there. It wasn't just temporal. It wasn't being put there only to come out again, and it built savings.
Right, and I certainly think that these are just very important tools. It doesn't take a lot. And also for just the parent to have their financial house in order, and it is very difficult to have that in an economy like this. However, there are ways to work towards it. Whether you're in your 20s, your 30s, your 40s, your 50s, even your 60s, you can bring your financial house in order. And you can do so just by making a phone call to us, and we can give you some tools and tips. And in this market, if you're looking at ways to invest in the market or refinance or take equity out and find ways to invest in it to grow your retirement fund, we certainly would be able to help you in that process as well.
Now, gee, what number would I call? I think the number would be 1-800-662-9550. These are friendly folks, and you won't regret making the call at all. 1-800-662-9550, the number for the Mohsin Mortgage Corporation. AM 590 WEZE, the place to be. 11 a.m. tomorrow morning for the Friday edition with Sarah.
Stay well, Boston.
This has been the Mohsin Mortgage Program with Sarah Mohsin. Mohsin Mortgage is licensed in several states for residential and commercial purchases and refinancing. Call 800-662-9550.